What's up, good people? How you doing this morning? Hey, happy Thursday. Listen, we have great news. We got good GDP numbers that just came out, and I expect today will be a green day. Mostly green. Anything could happen, of course. So let's get right into it. But before we do, make sure that you check out the top link below to learn how to trade. Listen, most of you got in after COVID. We're going to teach you how to trade and make money. We're going to teach you the basic fundamentals of things you know that are costing you. That's the top link below. Now let's go right into the GDP number and let's take a listen.
On the GDP side, we actually see a jump from 1.3 up to 2%. It's very unusual to see these types of moves when you're this long in the tooth. And do keep in mind, it really doesn't change any of the metrics for GDP because the 2% or 1.3 is still going to be the lightest that we've had since the last quarter of last year at 2.6. Personal consumption is coming in now at 4.2%. Also a very nice jump from 3.8 on the pricing index. 4.1%. It was 4.2 in the rearview mirror. It was expected to be 4.2. 4.1 is not the lowest, though. 3.9 was the lowest after the 9% read, which was the highest in 81. That was in Q2 of 22. So progress being made, but obviously slow progress. If you look at the core personal consumption expenditure, quarter over quarter, that's 4.9%. That's 1/10 less than the 5% we were expecting. And how does that pan up to history? Well, second quarter of 21, not 22, is a high watermark. That was at 6%, the highest since 83. The lowest it's been was the fourth quarter of last year at 4.4. And now 4.9%. So we see that this is also very sticky. As a matter of fact, we've had several numbers, of course, that were at 4.7 mid-22. So this is definitely a bit on the high side. In terms of jobless claims, 239,000. We're expecting 264,000. That is a huge, huge move. And 234,000 bring us to the lowest level going to the last week in May. And with respect to continuing claims, 1,742,000. That indeed is less than the numbers that we were expecting. And once again, we continue to stay below 1.8 million on the continuing claims side. Interest rates have moved up, Melissa Lee, and I'm sure they're moving up for a combination of a lot of reasons. Claims are on the light side. That keeps the Fed potentially hot. And even though our numbers, unlike Germany and some German states' inflation data that came out today, which was higher in most regions, higher than expected and higher than the last look, these were tame. But the Fed's going to have a tough job, and the Biden administration is going to have a tough job explaining away what still remains sticky but improving inflation. Back to
He took a jab at Biden. Biden was touting the economy on yesterday in his speech. And so he took a jab at Biden every time he gets a chance. Yeah, I don't think it's wise to be touting the economy when most of us, you and I, most of us don't feel like we're doing better. It's just politics at its best, or should I say at its worst, okay? So I also want to, sorry about that. I also want to, let's just check out where the indices are at this point. Look at that. And this is the pre-market. This is before the markets open. As you can see, everything is looking good. The Dow, S&P, and the NASDAQ. Look, the Dow is up 112 points. It went up as much as 140 points, I believe, while the numbers were coming out. So as you could see, when the GDP, gross domestic product, came out, that the Dow went up. So what is this saying? This saying that we are still bullish. We're still bullish. I mean, like you just heard, low jobs, so low unemployment, right? We get good job numbers. The housing, new housing is up instead of coming down. And now gross domestic product comes out and it is going positive. It's good. And so we have all of this still good data that is out and it is helping to prop the market up. I do expect today to be a good day. It closed on yesterday, on Wednesday. The market to the close ran up, so it got stronger to the close. So we had a sell-off, right? Before I go any further, I do want to let you guys know that this promotion, Moo, which is the second link below, we only have until Friday. But remember, you have to get it funded, and you want to leave time to get it funded. So do it today. And I don't want to oversell this. I know you guys hear a lot about it, but look, if you put $100 in, you're going to get it right back, plus 5 free stock and C3 AI. Let's look at C3 AI right now. This is what I'm telling you guys. One person told me they bought C3 AI, which is ticker symbol AI. They got a free one, but then they also bought one, and now they're going to buy another, and they're just going to let it ride. So you're getting that's look at it. So here, this is the free stock that you're getting. It's another $36, and it's up 2.8%. One person said that they wind up putting the $100 in, and they got 3 shares of that now because they used everything to get that. All right, so you can't lose with $100. So right, so they could, they can get 6 of them. They just take everything that you have and roll it over into that. All right, not just you, but every adult you know. Every adult you know, whether they're your kids or not, tell them to go open an account, get the free stuff, all right? All right, so let's talk about what else is happening, and so you guys could have a great day. Let's look at this. Oil prices fall on slower fuel demand and weak China data. That is some of the stuff that is affecting the market today. Gold hit a 3-month low after Fed's central bank hawkish tone. So Jerome Powell was speaking yesterday, and he had a very hawkish tone, and he was saying that he said that most policymakers see at least 2 or more rate hikes ahead. At least 2 or more rate hikes ahead. And believe it or not, all of this good data that we're getting is giving him more runway to go up, actually, instead of cool off, and so because he does not want to see inflation come back, because that will be worse. To me, I believe that will be worse than a light recession. Okay. So the pre-markets are up. Of course, Asian markets are down. And I just wanted to leave you guys with some things that is happening today. Let's look at our baby. Let's look at our baby Tesla. You guys know we've been in and out of these Tesla plays. And Tesla is also up this morning. Sorry, here we go. TSLA. Tesla is also up. Let's see. Yeah, Tesla's up, as you can see, 1.7% right here, good people. Tesla's also up in the pre-markets. So there you have it, good people. We got a good run in the morning. So the open will be green, and we got a good start to a good day. But there's always a big but in the room. All right. Me personally, remember, anything I say is not a suggestion for you to buy, hold, or sell. I would say, and this is what I'm doing. All right. Let's not get greedy. Okay. Let's not get overzealous and just put all our money in. And for those of you that are doing options on Tesla, me personally, I've been doing them daily. I know some of you have some out. I'm still going to say take profits, because weekends are scary. Weekends are scary, good people. Weekends do things that could reverse things by Monday. So things are looking good now, but by Monday, they could be looking a little different. And let's take a quick look at some of our popular crypto. And as we could see, everything is up. Bitcoin is up as much today, just about as it was down yesterday. Solana is up 11%. Look at that. So those are some of the things I just wanted you guys to look at this morning. Make sure that you check out the links below as we get you guys on your way to work. Make sure first to download the top link, which is Stock Up University, so you can learn from myself, learn charting from Josh, learn options from Keenan, dividends, and basic fundamentals. And lastly, make sure you get all of this for a $100 deposit. We got one more day, and you can get up to 17 free stock. That's Moo, the second link below. And I will see you later. Look, have a blessed day. Live, love, laugh, learn, and earn. Be kind, rewind, do it again.